my initials up, but
Oh, we're going. We're going. Hello, everyone, and welcome to another ARCS Chat. My name is Robin Bauer-Kilgo, and I'm one of the ARCS Chat team. Just a few quick technical notes. There is a slight delay between going public and our recording. So if you're going to follow along in the chat, just realize that there's a little bit of a delay happening right there. Also, a quick programming note. Last week, ARCS was happy to co-sponsor a webinar with CSAAM, the Collection Stewardship Group, all about COVID and reopening. If you want to go to collectionsstewardship.org, you can view that recording. It's also up on YouTube. They also have 3 more sessions all planned out for this week, all collection stewardship stuff. So if you want to take a look at them again, please go to collectionsstewardship.org. And without further ado, I'm going to hand the mic over to one of our hosts, Amanda Robinson.
Thanks, Robin. Well, welcome everyone. As Robin said, I'm Amanda, and I'll be taking the reins over today from John. This is a special episode of ARCS Chat that came to be due to listener interest regarding how the numerous changes in the world resulting from COVID-19 will affect our insurance practices and requirements moving forward. Thank you to everyone who wrote in requesting this topic, and a special thank you to the representatives from these fantastic ARCS sponsors, Huntington T. Block, Willis Tower Watson, Liberty Mutual Insurance Group, and Berkeley Asset Protection, who have generously come together today to weigh in on this subject and respond to your questions. Before we begin, we do want to state that as a field, we are in an ever-evolving process to address the changing needs and challenges brought on by COVID-19. Our responses as an industry will continue to change and develop as we learn and adapt. So I say this as a gentle reminder to keep an open, flexible mind as we continue to progress toward a new normal. So, similar to the structure of our shippers chat from April, given the size of our panel, I will be moderating the conversation a little more heavily than usual. With that said, we hope to field many of our listeners' questions live so we can address the concerns and curiosities of our colleagues. To all those of you listening live, remember to go ahead and sign into your YouTube account or your Google account, just like you would sign into your Gmail, to chat with the panel members as well as the others in the chat group. Please direct your questions to specific panelists if possible to help avoid any confusion in response to the questions. Both Robin and John will be moderating the chat so we can address your questions as we go. So without further ado, let me introduce our panel. Today we have Adrian Reed joining us from Huntington T. Block, along with Robert Solomon from Willis Towers Watson, and Nicholas Reynolds from Berkeley Asset Protection, and finally, Robert Pittinger from Liberty Mutual Insurance Group. Everyone, welcome to ARCS Chat.
Thank you.
Yeah. So our chat today is structured into about 4 general areas. Overarching questions in general regarding insurance, some context regarding the insurance cycle, insurance as it relates to exhibitions and loans, and insurance as it relates to our institutions. So to get started, Adrian, I'm going to put my first question to you, and that is, can you kind of explain the general role of what a broker does versus what a underwriter does?
Sure, thanks Amanda, and thanks for having us here. We're very excited to have this discussion. So Robert Salmon and I represent the broker side of the table, and Robert Pittinger and Nicholas Reynolds represent underwriters. As brokers, we represent the client. The museums are our clients, and what we do is basically go to market or go to insurance companies and respective underwriters that are employed by insurance companies to get different bids on insurance for the museums, and just determine what the best fit is for the client based off of coverage terms, pricing, claim service, a whole myriad of different things that impact the museum's product and insurance, and provide those options to the museum for them to select. If there actually is a claim, the insurance company is ultimately the one that pays out the loss. So they are the ones that actually write the check and hand it over to you to pay for that claim. So I hope that if anybody else would like to jump in on that.
That's great, Adrian. Thank you so much. So I think I'm going to start with a bit of a general question that we had fielded in from some of our participants at a previous chat. And that is, what are some of the new requirements that you see resulting from the pandemic crisis? Are there some precedents that have been established during this time that you all see continuing? Go for
I'll
it, Robert.
start with that one. And I'd like to also thank all of the ARCS team and the various members. It's a pleasure to be affiliated with such an outstanding organization. Much of the whole COVID-19 pandemic issue is so new to us. And we just look back, it's only been a little over 2.5 months. While it seems like an eternity while we're isolating during this time, for the most part, everything's shut down. The biggest thing was to make sure that collections were safe during the shutdown and that facility management maintained tight controls on the museum, HVAC systems, dust control, pests. So there was a responsibility that evolved out of the shutdown. But other than that, from a company standpoint, we look for the continued security, the continued monitoring as especially we go into reopening to make sure that all the various angles of the reopening process are monitored and security is kept in place as museum goers come back through our museum. If there is any one big change that I've seen is communication. To have each of you as clients contact your brokers, speak with your brokers because they're your front line. They are your experts to be able to assist you. They know your museum and they're there in the spot to be able to work with you on what your needs might be if there are any changes. And then in turn, brokers like Adrian and Robert Salmon then will come to the companies and we will talk through various issues if there is a possible need or requirement that coverages be adjusted.
Yeah. If I may,
Go ahead, Robert.
Yeah, I'd like to add just something to that. I think the beauty of working with the museum community is that a lot of the goals and objectives of the museums in terms of safeguarding their collections is their whole mission. And the beauty of those of us who are involved in art insurance, be it from a broker side or the underwriter side, is that basically our goals and objectives ultimately are all the same. So basically we work in tandem. And I think that's quite a rare, so the art insurance is quite a rare part of the insurance industry in that regard. But basically, the missions of the museum and ultimately the objective of the insurance companies to have no losses are basically one and the same.
That question kind of folds in nicely to a follow-up to that, which is, have you started to field questions from institutions regarding a reduction in exposure over the past couple of months as underwriters, or even are you even starting to get that type of feedback from your clients?
Well, I can go first, Adrian, on this one. Yeah, I think basically, particularly as we're sort of, a lot of museums are 7/1 fiscals. So we've basically been working quite heavily in terms of the whole renewal process for those museums that do renew July 1. And I think what's abundantly clear is that if you go back to the, basically the beginning, middle of March, that already with closures, exhibitions being postponed, delayed at best, cancelled at worst, that there's been this certainly discussion, quite serious discussions about, well, do we in fact get a reduction in premium, basically for the last quarter of 2021, and I think it's basically, and I certainly Robert and Nick can jump in on this because they obviously got a different perspective. I think what we're seeing is that really there is only a reduction in premium for some reduced exposures if it fundamentally impacts the amount of insurance that you need or that you've been buying. So for example, if you're a museum that buys quite a substantial limit and you can basically look at your exhibition activity, find out that you've basically cancelled shipments, you've reduced exhibition exposure, you've postponed or delayed exhibitions, if you can go to your broker and your underwriters and point out that there are substantially less risk in terms of just, let's talk basic values of artworks in the museum, then you can perhaps discuss dropping your limits a bit. And that would have been, you know, from March, middle of March, basically through to probably July 1. But I think what we're saying is if you can't really do that, then ultimately you're buying an annual policy for a certain amount of limit. And a lot of that premium, a lot of that exposure is based on basically simply what you've got in your collections on site.
Mm-hmm.
Yeah, I would add that on some level, the risk is worse purely because the museums are empty. Part of the inbuilt, you know, strengths of museums is you have collection staff such as yourself in there almost 24 hours a day, taking care of the artworks. Sorry, my dog is about to jump up on me. Excuse me. So, you know, I mean, fires can still happen, water damage can still happen. Arguably, that's actually a worse risk, you know, given the fact that no one's there. But, you know, to Robert's point, you know, where you're able to demonstrate that there are reduced exposures, every insurer will work with you to help some of the cost pain. Excuse me. She's not going to move.
No, you're fine. All dogs are welcome here and encouraged. Yeah, well, I can say at least, oh, go ahead, Adrian.
Sure. So yeah, we've, like Robert Salmon mentioned, also been, you know, fielding responses from all the different underwriters and insurance companies to get their take on it. And like Nicholas said, you know, the vast majority of the largest claims that we've ever seen, you know, at museums throughout the, you know, 55 years that we've been insuring them have been fire and water losses. And those don't go away. And in fact, could actually be worse in these circumstances. Last week, I had a client that showed up, and turns out their the water heater from the facility next door to them had burst, and they had 2 inches of water in their space, you know, and nobody was there to see it. And so, you know, those kind of things still weigh heavily on us in the insurance companies, and risks that we still need to be understand that the policy is on deck and ready to pay. So unless you have a situation, a very specific situation, where there has been a very specific coverage in place that you can take away, which, by the way, most museums underinsure or insure at a loss limit, so that usually isn't the case. Then, you know, there's not much room there to be able to budge in terms of the premium reductions.
Mm-hmm.
Go ahead, Robert.
Might I add just one additional point, and that is, when you're looking to reduce coverages, you need to keep in mind that if the museum has any additional locations, whether it's an offsite of the museum itself, or if you lease space at a fine art specialty warehouse, that you should know what exactly the limits are in those various locations, because as you start cutting back, you want to make sure that not only the main museum, but any other locations are included in your analysis.
That's a really good point. Go ahead, John.
Nicholas, you're going to see an uptick in your business because of the dog. People are really,
Beautiful
really
dog.
enjoying the company. So
She's called Jaja.
I love it.
Gorgeous.
Actually, it's a good. No, it's okay. Do we actually have any questions coming in specifically, not dog related?
Yeah, we do have one I can pass along. It says, in previous webinars, there has been a discussion of potentially having only one driver in a truck due to social distancing. Mm-hmm. Would our policies accept that?
I think we need to look at all the controls and specialty considerations that are made for that transport. Is it extremely high value transport? Are we moving a single piece worth $200 million? If so, most likely the trucking companies will put a shield in the cab for the 2 employees. And if we have to have a courier join, then we always have a follow car opportunity. But we don't know how long this requirement will be out there. But we need to be cognizant of the fact that there will be different types of shipments. And if it is not an extraordinarily high valued one where couriers are not required, that's one scenario. But if they are required, it goes back to the communication with your broker and work through all the scenarios with them. Your brokers then will come to the carriers, and the carrier will have an opportunity to talk through what additional security measures could be implemented to help protect the works.
Adrian, did you have a follow-up you wanted to add?
Yeah, I mean, I can speak just, from the coverage standpoint, a museum policy, if you have a policy, with Willis or HTV, it's very similar. There is not any type of, transit exclusion, or warranty that requires you to have a certain number of people in the car. But that being said, like Robert Pittenger said, just be in close communication with your broker, let them know the situation, even if you're within your transit limits and you have the ability to do so. It's always good to just give them a heads up and let them know what the plan is, see if they have any recommendations. That would be my recommendation.
Go ahead, Robert.
Another comment to that point, interestingly enough, if you sort of turn the clock back a couple of decades in terms of insurance for transits in particular, there used to be a breakout rate that you basically, if you had a courier, you got a reduced rate per million than if you didn't, particularly for international shipments. That is going back a couple of decades. And so now we don't have that. Basically, I think the way the industry also has developed is the insurers very much look to you as the museum professionals to basically work out how you want something to happen and be dealt with. And then you report that back to your broker, who then negotiates with the underwriters to find out whether that's acceptable. But I just think it's to bear in mind, as the values of art have gone up and up and up, this kind of differential rate with a courier, rate for not with a courier, has basically long gone.
Go ahead, Nicholas.
I just wanted to chip in. I think it was borne out fairly clearly in the session with the packers and shippers. There's just going to have to be a lot of cooperation, a lot of planning, a lot of thinking about things ever so slightly differently. I don't think anyone would, want to force a courier into a truck, plastic sheet, screen aside. I think, some thought's going to have to be given around, okay, is it really necessary to move something from A to B? Would it be better to wait? Again, what we know today might well be very different from what we know tomorrow. The situation's, I think, constantly evolving. So it's just a question of patience and planning and, open-mindedness.
So
Go ahead, John.
There was a comment in the chat about indemnity, and I do want to mention that we did approach Patricia Loico about indemnity policy regarding shipping, since we're on the topic of shipping. And her comment was that there's nothing new, nothing has changed. And so with that in mind, all of those requirements are still there in terms of, say, a courier has to be on the plane or on the truck. Follow cars are not permitted with indemnity. So all of the existing indemnity policies are still in place at the moment. So I just wanted to add that little note. So yeah, anyway.
Are there any more questions coming in through the chat?
Yeah, there's a bunch of questions asking everyone's kind of opinions on electronic signatures and programs like DocuSign, and kind of what's everyone's thoughts on those, or if that's going to change at all in the coming months.
Do they specify for like loan contracts or exhibition contracts, or?
I think
bill of ladings.
Yeah, it basically just says using stuff like DocuSign. Is it being considered right now?
Okay. Does anyone on the panel want to respond to that?
Go ahead.
I think it's fine. I mean, We have we also insure a lot of jewelers, and very early on in this pandemic, the practice of physically, taking the FedEx pack and signing for it, stopped very, very quickly, and it's fine. It's not an alternative for the other actions that go into receiving goods, say on a bill of lading. It's not like you can just drop a crate at the door and just say, hey, it's delivered. I mean, there still has to, be the proper inspection process. But as a, not having a wet signature, I think given the circumstances, no one's going to argue with that.
There was a slight clarification too. Basically, they're saying bill of lading, what if there's no signature at all? What would we do in that situation?
Well, I think you have an option to perhaps send a confirmation email, that the shipper can send an email to the museum and have the museum respond back saying, yes, per our discussion with the delivery crew, the crate was delivered and was initially inspected, and all appears to be in order based on the current condition. So the email is an option. I don't think bring your own pen is going to necessarily be an option with this yet, but that is something that could be added to the list. But I would say if we can't get the electronic signature, then a confirmation email would serve as that documentation.
Yeah,
perhaps just reference in lieu of a signature on the bill of lading, so everyone's clear what they're referencing. But again, no one's going to fight you on that.
Do you have a follow-up, Adrian?
Yeah, I mean, I had heard one shipper from that discussion last week, was talking about sort of like Amazon taking a picture, of your package in your front porch and leaving it, and that's their confirmation that they've delivered it. Doesn't necessarily help you if your package is stolen from your front porch. And I guess I would just say that, art is not an Amazon delivery, and we shouldn't be treating it that way. The importance of the bill of lading is really to establish that paper trail and that documentation. Documentation and procedures like that are really so important when it comes to loss prevention with museums. I mean, I almost put it up there with just, facility maintenance. You have to have good procedures and protocol and documentation to be able to establish, a whole myriad of different things. So I would urge against that kind of practice, and maybe come up with something like Robert Pittenger said in lieu, having some sort of email communication where you're effectively closing the loop in terms of delivery and receipt.
Do you have any other questions that you want to throw away, Robin, from the chat before we move on?
Why don't you guys go ahead and go on to, we'll let the chat kind of fill up again, and then we can come back and check.
I think this might be a good time to talk a little bit about the insurance cycle. And I wonder if we could have someone on the panel explain a little bit about a hard and soft market and how that impacts premium rates for museums. Who wants to take that one?
Go
ahead.
I'll take that one. Yeah, I mean, so the insurance goes through cycles, and it's ultimately dependent upon its profitability. Typically what happens when the industry is making money, more investors come into the business because they see opportunities to make money. And so with any other kind of supply and demand, oversupply reduces prices. Conversely, when there's adverse experience in the insurance industry, it's a less attractive option for people to invest money in. And so the supply dries up, which in turn increases pricing. A lot of that's driven by the obvious results of an insurance industry. I mean, we look back over the past 3 or 4 years, and we've had a myriad of weather-related incidents. The hurricanes, the wildfires. You also those are sort of pertaining to fine art, but on a broader perspective, there's increased plaintiff litigation against carriers. There are litigation funds that are all going after the insurance companies and adversely affecting their results. And so where we are, even COVID aside, which is going to be probably another 9/11 size event. I mean, it's going to be substantial. The result of those things had already pushed. We were definitely in a hardening market.
Did you have a follow-up, Robert, you wanted to add?
This is Robert Salmon. As a broker, I can see where insurers, particularly it started last September, certainly out of London, out of the London market, there was talk of this hardening market. Maybe sort of the odd man out here, but I'm actually not, seeing a hardening market yet. It basically, the beginning of the year, there was talk of it, on your renewals, some people suggesting, and I'm talking about museums, obviously, maybe a 3 or 4% increase. Worst case scenario budget, around 4%, 5% increase. As we've got closer again to this July 1 fiscal, big renewal date in the insurance calendar, I would say we're basically seeing flat renewals. I don't know whether that's, we've got some lag time. London definitely did try and get the rates up there, as I said, right at the beginning of the year, end of last year. There was a lot of talk about it, still is. But certainly in the US, on the domestic insurance carrier market side, not really seeing it. And I would say that the situation is still, pretty competitive. For the museums, generally a desire to risks, and there's quite a lot of keenness and competitiveness in terms of the insurance carriers out there, wanting to quote a new opportunity. And when you have that kind of competitiveness, then that will keep the rates down and keep it as a softer market. Also, if you look back, again, over the last decade or so, the rates kind of per million have actually been fairly stable, if not coming down. As the values, again, as art values have gone up, museums are put in a position of having to buy more limit of insurance. And what that has done is basically been forcing the price per million lower.
And if I might add just an additional point, the soft market is impacted by so many elements out there, and Nicholas and Robert have highlighted the big ones. But we have to be mindful of the natural catastrophes that we've all experienced over the last 3 to 5 years, especially the big fires in California. And that has made a major mark on the insurance industry, because there are billions of dollars paid out for that in all areas. Now, I'm not just referring to the museum side, but all losses. Complete neighborhoods were gone. So that is all included in the market cycles, because this last soft market that we've had has lasted a very long time, and one would expect that we'll start seeing changes this fall and into next year.
Did you have a follow-up, John?
Yeah, I had, out of curiosity and maybe more historically speaking, what are the circumstances that might actually harden the market? And is that something that we should, I mean, you maybe alluded to it, Robert Pittenger, about, it's been soft for a while, but, are we looking at a possibility of a situation where it might harden?
I can respond to that. I think we sort of touched on it. I mean, for example, if you go back.
John, I don't know if we lost you there, but might I mention that many people talk about the COVID situation as a double black swan event, meaning that it's could be considered greater than a severe hurricane hitting a mainland area. And generally, those type of events, it could be single, not always a combination, but one will kick it in, because reinsurance costs will go up and the losses still have to be paid. So it's a big cycle there, but the economic environment, the investment side also plays a big part.
Go ahead, Adrian.
Yeah, I mean, I'd like to add to that in terms of the reinsurance cycle, because a lot of reinsurance runs on a 1/1 renewal basis. And so a lot will tell on what happens with those renewals come 2021. And from the indications that we've received from various markets, there's so much degree of uncertainty right now. So much has changed in the past 2 months that we could have ever imagined. And so as we are getting estimate requests for 2021, 2022, we're really being mindful about that and trying to be conservative, because the last thing we want to do is provide an estimate, that is just, off the mark in terms of, what the pricing is in 2021, 2022, and the museum's not prepared for it. So, we've been trying to be very conservative in that way. And I know it's difficult news to get an estimate that's higher than expected, but it's just with a grain of caution.
And I'm sorry, Robert Simon, I think you had gotten cut off earlier for the technical glitch.
Okay.
Go ahead and continue.
Well, it was just like using some sort of real life kind of examples when we talk about what has caused the market to harden before. And I'm again pertaining this is specifically to the museum insurance, collections insurance world. I think you've got to go back to, first of all, 9/11, that had a huge impact, but it was more, that had a more impact of changing the coverage. Terrorism, basically was taken away for a while until you got the Terrorism Risk Insurance Act. I'm not sure it had a huge impact on actual pricing, at least for the museum world. It was more basically, you've been used to getting terrorism coverage. Now you suddenly didn't have it for about 15 months until the insurers started giving it back again at a slight additional premium. Then the other big one, I think, which has always caused a bit of confusion, was Hurricane Katrina, which I think is like 2005. So we're going back again quite a long way. And what that did, everyone thought, well, it's a hurricane. What that actually did was it made the insurance world look at their modeling in a much more different way. And they suddenly realized that they'd been underestimating what catastrophic, something like a Katrina, how they underestimated what catastrophic loss could be. And what that did, not so much on coastal areas, was it really hit home for museums and large private collectors in California. And suddenly the price of earthquake insurance shot up like threefold at the beginning of like 2007. And that was because, not because of earthquakes, but because of actually the hurricane losses and the insurers suddenly realizing that they needed to completely reanalyze their loss models. And so museums in California, and particularly LA and San Francisco, the earthquake charges were 3 times what they had been. And it caused actually a lot of real serious hardship in museums being able to buy enough just to not to satisfy their own collection needs, but just to satisfy lender needs. And then probably the next one along, which really I think impacted a lot of people in the art insurance world, was Hurricane Sandy or Superstorm Sandy, which probably closer to everyone's more recent memory.
Did you have a follow-up, John, from the chat?
Yeah, people are. There are some people asking about if, along the lines of what we're talking about, specifying specific disasters, if pandemic coverage is something that is likely to take effect, or is that sort of already included in various other types of coverages?
So
go ahead, Adrian.
Strictly speaking, COVID wasn't a physical loss or damage that impacted art insurance. So as a direct consequence in terms of coverage, there shouldn't be any change. COVID or pandemic insurance really would come more into play with business interruption losses and insurance related to that, which is a commercial insurance, very, very different from the museum's fine art collection insurance.
Is there anything else from the chat that came in, John or Robin, that you'd like to throw into the panel?
I have one from early on that we kind of skipped, which is, has there been any discussion of potential visitor exposure liability amongst providers?
I'll make a comment on that one. For the purpose of our call today, as I understand it, we're talking about collection insurance, which is the the insurance to protect the museum's permanent collection as well as the loans that the museum has taken in. And we're not discussing the liability, the building, the workers' comp. So that perhaps would be a topic for another conversation. And it's an excellent question, because as museums start to reopen, there's a whole new set of requirements that will have to be deployed. And that question would fit very well in that arena.
I would be just curious if a courier, as a human in all the interaction, but caring for collections, being representative of collections in transit, would that individual's health, safety at all ever be something that might be covered under a fine arts policy?
No, the fine arts policy would only handle the direct physical loss to the actual works.
Okay. Does anyone, I'm sorry, I didn't mean to cut anyone off if they had follow-up to that. Oh.
I guess I
think we're all in agreement that the answer is if it's a collections insurance policy, it's the artwork, and the key is it's got to be a physical loss or damage. So we certainly had some requests about can artworks. We've actually more in children's museum type situation where we've had some exhibits that supposedly they're going to have to replace because they can no longer sanitize them with confidence. And so it sounds to me that this child exhibit, a lot of the characters in it might have to be totally replaced. So we're being asked, would the policy respond to that? And that's going to be an interesting one, because if they've been sanitized previously, dry cleaned or what have you, or even frozen, why can they not be again? And I think it's all just about having a confidence that the actual cleaning process, sanitization, isn't as perhaps as good as it should be, which makes then the exhibit or the exhibit items now useless. So that'll be an interesting one, I think, to present to our insurers when the time comes.
Yeah, absolutely. If from someone with a fine art background and you say sanitize, I just see people running with Lysol cans at my paintings, and that terrifies me. But I can see how reproduction might be.
Yeah, these are. I guess I should sort of try to explain. These are without giving too much away. These are kind of like little cloth dolls, cloth animals, mixture of wood and I guess fabric. And I think they're worried that the fabric will never be clean again.
Yeah, well, it's an excellent point, because I'm sure many people are dealing with that. And if we're only thinking in one mindset, it doesn't necessarily touch on all the different clients that you all service. So that's great.
Yeah, the chat actually, someone has, would FAI, fine arts insurance, be involved if a disinfecting spray is used on collections that cause damage? So people are asking that question. And I know even anecdotally on the CSAM listserv messages, you've seen things coming out about people with the disinfectant questions and with the sprays and all that kind of stuff. So I think this is going to be a question that's going to come up over and over again, for sure.
Yeah, well, I mean, what if something is damaged from a disinfectant? I mean, it's going to happen, right? There was an interesting question here about, though every institution's policy is slightly different, could you say a general word about pandemic-related impacts that would fall under common exclusions versus those that would be covered?
Well,
Who wants to take that? Go ahead, Robert.
I can start off, and then everyone else can jump in. I mean, quite a lot of museum policies, particularly out of London again, but also some domestic carriers, do have an exclusion of loss due to virus or bacteria. But again, the thing here is we're talking about collections objects and artworks. There's got to be some physical loss or damage. So with the question, that exclusion is put on, I guess, for exactly this kind of situation, COVID-19. But again, if the COVID-19 doesn't actually have any impact damage-wise to the artworks, then it's seems to me almost a seemingly redundant exclusion. London has also recently has been trying with some, I don't know what degree of success, but they've actually written and already given it a Lloyd's sort of association clause number, a coronavirus exclusion, which basically came out 4th of March. 2020 was when it first was sort of thrown out there. And that basically says your insurance policy does not cover any claim in any way caused by or resulting from coronavirus, COVID-19, severe acute respiratory syndrome, coronavirus 2, SARS-CoV-2, any mutation or variation of SARS-CoV-2, or any fear or threat of the above. So kind of interesting. Interesting language we put under a physical loss finance policy, and really, one could argue that has no business being under a finance insurance policy in the first place. But so anyway, underwriters, I think, are obviously trying to put out some protections so they don't suddenly get what they would deem unexpected type losses.
Nicholas, did you have a follow-up to that?
Yeah, I just wanted to comment on that, because those exclusions, particularly the one that Robert's talking about, are coming out of the reinsurance market, because it's not terribly different from asbestos. The reinsurers are just trying to ring fence their exposures on this so that they can start 2020, 2021 with a clean slate, saying there are no legacy issues there. That's what's, frankly driving it. Sometimes the insurance industry does act with a one-size-fits-all response, and whilst arguably there's no COVID coverage to artwork, the addition of that exclusion will still mean insurance is available going forward at good competitive terms and prices.
Robin, do we have anything else coming through the chat before we move on?
One just popped in saying, I wonder if anyone is expecting increased claims for artwork in transit, as our industry might maybe just decreasing the use of couriers in the future. Less eyes on shipments equals more accidents. Do you guys see anything like that happening, or do you suspect anything like that happening?
I think there's a likelihood that could happen, and that's why we have to be very careful before we embark on a shipment to know what the current, perhaps if it's going via air freight, what is the vessel's schedule? Are they operating on a frequent basis, so that we make sure that the art to be shipped does not arrive at the facility too early, that it fits more with the schedule. We want to be very careful that as we ship art, that it's monitored and can be managed in each of the various stages. And with the slowdown that's obvious out there, with the cutback in the number of flights, we will all be competing for those flights to get our work on there, and we'll have to make sure that the schedules align.
Go ahead, Adrian. Did you have a follow-up to that?
Yeah, I mean, the last ARC chat that you had with the shippers was very interesting, because this question about sort of pent-up demand and, who's going to get the first access, how are they going to prioritize museums and their shipments in terms of when everybody starts kicking back into gear. It was very interesting to hear their responses to that. My impression and hope really is that, after all this is said and done, transits are actually handled far more carefully, and there's far more communication, and that would be a net gain. That would be at least my hope, and after all this is done.
Go ahead, Robert Simon.
Also, shorter term, I think also a lot of it's going to be what the lender's requirements are on a lot of these situations, and if the comfort level, as we talked about already, do museum registrars have a comfort level in getting into a truck, or are they going to be happier in a follow car? I also say, sort of slightly bigger picture, the insurance industry is often criticized for being reactive rather than proactive, and I think often in terms of a volume of arts insurance claims, if, let's say, once museums start opening up again and shipments occur and exhibitions are that were postponed are now starting to take place. That if, because of the shipping, I guess, is done rather differently, and there are less couriers, for example, if we suddenly see an uptick in claims coming in, then that's when the insurance world then responds and reacts to that uptick in claims. If there is no uptick in claims, then I think it's going to be more a situation where, you know, we rely on the museum professionals, working with the professional final shippers in terms of deciding what works and what doesn't work.
Go ahead, John.
I want to continue on the courier topic because there's a few questions about that. I'll present this as a double question. So A, how acceptable is having a courier on each end of a shipment in terms of meeting a courier policy? So someone supervising at the first airport and then someone at the other end. And then also some companies are doing now a virtual or digital courier. And how acceptable is that in terms of policies and if, I mean, assuming approval on a institutional level or a legal level?
Did you want to respond to that, Adrian?
Yeah, I mean, I think that's great, quite honestly. You know, it reduces the expense on the museums for having that. You know, it really goes back down to, you know, what kind of level of trust do you have with your institution that you're lending to? And what degree of certainty do you have that they will follow the protocol that they have, you know, told you that they would do? To Robert's point, you know, it is a reactive sort of thing. So if we start seeing issues come up from it, then, you know, of course there will be a reactive result to it. But I mean, I think it's actually a good thing in terms of reducing costs to come up with a way to collaborate and cooperate virtually with your colleagues and get the job done without somebody getting on a plane.
Did Nick and Robert have any additional comments, actually, as they're the ones, the underwriters on this?
Yeah,
I mean, I think.
Yes, and I mean, it is going to require, I think as mentioned earlier, it's going to require a lot more coordination, talking between the interested parties. You know, as insurers, I'll speak for Mr. Pittinger, but, you know, we do have absolute confidence in your ability to transport artwork safely, you know, between point A and point B. You know, historically, you've proven that you're capable of managing that process. So it's again, a lot's going to depend on what it is, how big it is, where it's going to, from, when, all those things. So it's just going to be a conversation. But I would point out also that, you know, always read your policy, because as far as I'm aware, there are very few museum insurance policies out there that say you have to have your artwork couriered or it's got to go this way or that way. You're given a tremendous, I mean, it's actually a staggering latitude, both in terms of limit and coverage. So, you know, it's always, you know, make the best decision that you can.
Yeah. And I would just add, because those are all excellent points that my colleagues have mentioned, communication is the key. When the museum team puts together their plan, communicating it with the broker, especially if it's an international flight, there's so many more complications because from an international perspective, we don't always know what the current shipping requirements are, or as far as receiving goods in that particular country. We don't know what stage of opening up that country might be. So just to run through those scenarios with your broker, and the broker can then come to the carriers and we can talk about what some of the options might be. Most likely for the very large single pieces, we'll find that there will be more complex shipping requirements for them. So it goes back to what Nicholas had said. It depends heavily on what the size and the values are, but the very fragile and the very expensive works or very high valued works are the ones that are going to take a lot more time.
Go ahead, Robert.
On the sort of broker perspective, and I think Adrian would probably agree with me on this, is the last thing we want to see though is policies out of the US art insurance market, and indeed perhaps that matter London, sort of turn into something like some of the other European countries have, where they actually do write into the policy specific requirements about how things will be shipped, as well as they do on how things will be displayed, and whether there are 2 drivers and whether a courier. And I'm actually looking at a policy here. It's a French insurance company, and it actually stipulates, there's about a half a page of requirements for how you will ship. So that is the insurance company basically dictating and mandating to the museum how they will actually deal with a certain value shipment. And I think this is where, to echo what all of us have said, this communication, the greater communication we have, the less likely we'll be forced into a position like is coming out of France.
And I'd be even curious to see, just in the few months that most of the world has been put in a work from home remote scenario, what technologies have come out of this that will go a long way, like we've already touched on, that may take the place of things where we had been sending people before, or may be useful where we hadn't been using them before. And I think it will play a role in courier trips, especially, or with loans and communicating with lenders. Go ahead, John. Do you have something from the chat?
Yeah. So, along the lines of using technology, there's discussion about the virtual condition reporting, and in the instance of a claim, how well does that hold up? And I'm going to assume, and maybe the person who asked this question could clarify if I don't state this properly. Virtual condition report would be essentially doing a video chat of some sort while reviewing an object. And so assuming you do that, and in the instance of a claim, how well do we, or how do we file a claim in that instance, and how does that hold up?
I'm familiar with a couple of new entities out there that are offering this type of condition reporting. The way I understand them, the most important parts of it will be the documentation, because part of that virtual condition report will be detailed notes and observations on the actual work itself, and a lot of very high definition images front and back across the various quadrants of the work, to make sure that there is a very dependable documentation with the images that would identify how the condition was at that particular time.
Did anyone have a follow-up to Robert's comments?
Yeah, I mean, they change everything. I mean, you're photographing an object, and it's all about documenting the changing condition from time A to time B.
Was there anything else from the chat, John?
No, there's just a lot more discussion about the courier question is a live one, and it's kind of shrouded in uncertainty, of course, but just how to do virtual and digital courier trips and everything. And would your shipping agent who is supervising at the airport and on the tarmac, can that be considered a courier, and these types of questions? And then where does the technology aspect, the virtual courier, where can that actually jump in, and the legalities of it, in terms of Homeland Security and airport security and everything. So that's kind of where that discussion is going. If anyone has anything to add on that, that would be great.
That's where we need the indemnity folks.
Right. Exactly.
Yeah, it
gonna
might
have
be a
indemnity
good
for-
topic for some point down the road when we all
Yeah.
start to figure out a little bit better how we're going to reopen and start moving again and what we're comfortable with and what's safe.
Also,
Go ahead, Robert.
like I say, yeah, I mean, I also think, in terms of particularly a traveling exhibition where, there might be 3 venues and the artwork goes to all 3. And obviously the condition report is fundamentally important just for the condition of the artwork itself from venue to venue. But if, for example, the insurance on that artwork was completely seamless and covered on a complete wall-to-wall basis, including all the transits and at each venue, then yes, we do the condition report, but it's still the same insurance company that's actually going to be responding in the event of loss or damage. That's the kind of, I guess, the perfect kind of world situation. More complicated and less perfect is if you've got 3 venues and each of those venues is providing a different insurance product. Might even be one venue might be government indemnity. Another one might be, a foreign insurance company, and then the US venue has the good old US insurance. And so in that situation, because you are pretending, you're basically coming down to, well, where exactly did the loss or damage occur? And when you've got 3 different insurance type contracts, it becomes a lot more pivotal, or rather, condition report becomes a lot more pivotal about which carrier is then responsible. So I think that will impact too the complexity of the exhibition and the complexity of the actual insurance arrangements. And it might be for a while that we decide traveling shows should really be on a complete wall-to-wall basis, all with one insurance company, until we do resolve this whole condition report subject.
Did you have a follow-up, Adrian?
Yeah.
Something to think about.
So a lot of museums, we talk about this a lot, the patchwork work insurance, which is the cheaper option versus the wall-to-wall, which is what Robert's talking about. It's more expensive. And, I see a lot of museums steer away from that just because it's more costly. But maybe, with the virtual condition report and the lack of couriers, those cost savings, are taken off the table, and then maybe can be applied towards buying a wall-to-wall policy, like what Robert's talking about. So maybe that's a solution in terms of a budget standpoint, that you can transfer those savings from one area to the other.
That's a very good point. And just in terms of the changing world we're moving forward, and maybe the cost of that type of policy is worth it, is worth the investment versus having separate policies that save, just because it gives us the peace of mind that a policy like that offers. So we're coming towards the end of our chat here, and I did want to squeeze in one more question before we start wrapping things up, and that's a little bit, we've touched on it kind of in the beginning of our chat, but whether or not the loss of revenue and financial instability of institutions will play a role on the premiums, and how the reopening of institutions may or may not impact their insurance coverage or practices. You want to go ahead and take that, Adrian?
Yeah, I'll just start it off. And to Robert Salmon's point about the hard market, I think a lot of what we're seeing in terms of 7/1 renewals is a direct result of the financial austerity and dire straits that museums are in right now. We're pushing as much as we can to reduce those premium increases just exactly for that reason. So, I think that is something important to add to the discussion.
Do you have a follow-up, Nicholas?
Yeah, I mean, just to point out that, your fine art insurance policy is mostly based on the value of your artwork rather than your revenues. I think it does beg an examination by the insurance purchasers of, the basis on which they're making their insurance purchase. They need to start thinking about, why they're buying X limit as opposed to X minus 10 or what have you. They should look at the deductibles and, really give serious consideration as to, what in their mind the purpose of insurance is. Because a lot of it is bought on the basis, well, I know they buy, X million, and so we're twice the size, so we'll buy 2X. I realize that's a grave oversimplification of it, but I think this is one of those times where, you really have to understand and articulate what you're buying your insurance for and base it on that. And this is just a great time to go back and revisit that.
It's a very wonderful point. Does anyone else have a follow-up comment? Let's go ahead, Robert.
I just go working off what Nick has just suggested and been talking about, and that is, with that, I think is, a lot of larger institutions. We talk about the values, but a lot of the larger institutions, the amount that they buy is almost dictated to by their loan obligations. So if we see, say, for a period of time during this, what's going to be sort of an era of some uncertainty for a while, then maybe there will be less loans and less exhibitions. And if that is the case, then to speak to Nick's point, then yes, if you have less loan obligations, maybe for your own collection, you don't need as much limit. But that has to be looked at very closely. And there are short-term loans versus long-term loan obligations, and how much of the permanent collection is, what percentage of long-term loans makes up some of that permanent collection. So there are so many factors that take into account, and we're just really starting, looking at all these considerations.
Well, that's wonderful feedback, and I'm going to go ahead and wrap us up here. I want to thank all of our participants again on the panel for their insight, their time, and their expertise. We have Adrian Reed with us from Huntington T. Block, Robert Salmon from Willis Towers Watson, Nicholas Reynolds from Berkeley Asset Protection, and Robert Pittenger from Liberty Mutual Insurance Group. ARCS would like to thank them all for their continued support and the continued sponsorship of these companies, as it allows us to continue to provide resources and content for our membership and the field of collection stewardship, especially during these challenging times. I do want to send a few reminders as we wrap up. Remember that ARCS has compiled a list of resources and materials related to COVID-19. You can access this information on the ARCS website, as well as make recommendations to add materials and information via the submission button at the top of the page. Also, if you've missed an ARCS chat episode, don't worry. You can catch them all up on our ARCS YouTube live page. You can also listen to the podcast anywhere you get podcasts, like Apple, Google Play, Stitcher, and Spotify. And of course, go ahead, rate us, review us, and let us know what other topics you want to see. Many thanks again to everyone on the panel today. It's been wonderful to learn from you all, and I really value your time. Thank you again.
We thank you. Appreciate
Thank you for having us.
Thank you.
All right, guys, we will see you all later.
Cheers.
Take care.
Yeah, sure.
Bye.